Good morning. Today is Friday, July the 7th, and we are into the last trading day for the first week of July. And the time right now in Singapore is 9 minutes past 9 in the morning. Now, overnight, we have quite a bit of movements in equity markets as well as in various markets. Today, we're going to talk about the dollar index. Now, of course, yesterday we have the release of the private numbers called the ADP job opening numbers. It went into the market with very low expectation, but what was released was drastically stronger than what the market was expecting. It created almost 500,000 new jobs for last month. And that is surprising because we have never seen this this kind of numbers of new jobs being created since March of last year. So this suggests that the US labor market is very resilient. So what it means is that it will give the Federal Reserve the cover it needed to further hike rates without having to worry that any further rate hike is going to cause the economy to slip into a recession. So there is very little talk about a recession right now in the States because both the numbers coming in as far as the job numbers are concerned, it seems to suggest that the labor market is a lot more resilient. Now, this is of course going into tonight's non-farm payroll. Again, that is going to provide further fireworks as we go into tonight's trading. But overnight, because of this vastly improved ADP private numbers, private job numbers, we have seen the dollar initially reacted to the upside. In fact, we saw the dollar index went to a high of 103.27, which is marginally within the bracket of prices I was expecting the dollar index to trade into. That level is 103.26 to 103.57, and the fact that the market actually come back down after that initial burst to the upside suggests that the market may have already completed its rebound from 101.48 from the low of June 22nd. So you can see that this actually rebound is a three-way affair. So when the market hit this target price and then come off, that suggests that the market is technically weak. If that is the case, then I would like to suggest, or maybe I would like to ponder the idea that maybe the dollar index is going to see further downside, perhaps even taking out the 101.48 that we last saw on June 22nd. So if that trajectory actually pans out, I do have a target at 99.40 to 100.14. So let's see whether I'm correct in this move, because if I'm right, there's a lot of downside potential, at least 200 to odd points for the market to drift all the way lower. So this is my idea. Let's see whether it pans out tonight after the non-farm payroll is released. In the meantime, you take care, and I wish you guys have a great weekend ahead. Bye-bye. Take care.